Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today our guest is Ryan Christopher Nunes. Thanks for being on the show, Ryan.
Whitney, thanks for having me. Appreciate it.
Yeah, my pleasure. Ryan and I met at the Old Capitol Conference, I think.
That's right.
In Dallas last year, and we've got to communicate numerous times since then. It's been great to get to know him and just watch he and his partner just grow their business and what they're doing. Looking forward to this conversation. But a little about him. He's the number one salesperson leading oil and gas derivative sales teams while working at Wall Street banks for 13 years. Transitioned to multifamily last spring and has co-sponsored $34 million in assets and is a passive investor in over 2,700 units across Texas, Ohio, Florida, Phoenix, and Georgia. He launched Life-Changing Capital last year and is a data-driven multifamily syndicator that takes an institutional approach to a non-institutional segment of the asset class. So looking forward to getting into that, Ryan. Give the listeners a little more about who you are, and let's jump into what you're doing at Life-Changing Capital.
Yeah, no, I appreciate it, Whitney. Thanks again for having me on the show. So I grew up in the East Coast in New Jersey. I did my undergrad at Georgetown, undergrad in finance and international business, and then started working in New Jersey for a utility company and got involved in their gas trading business, started doing my MBA part-time nights and weekends, and knew that I wanted to work on Wall Street. So kind of segued, given my gas and power background, into Wall Street banks on their oil and gas commodity trading desks, and just had a series of wins where series of quick promotions. Was promoted to managing director by the time I was 30 and was one of the youngest ones in my class, and just really enjoyed the space. Was the right spot at the right time, and really enjoyed running different sales teams and working with clients, and did that for a number of years, 13 years in total. And there was ups and downs in the commodities business, just like we're having ups and downs, and both in the financial markets and the commodities business today. And for a number of years, and just was thinking about as we were having kids, just thought about, what are some things that I can do to engage them, to build a legacy for them, as well as, as a hedge for my career. And so had looked at a lot of different things. I looked at starting some schools. I'm very passionate about education. Had looked at some music schools, had looked at some franchises. And, unfortunately, none of those were the right fit for my skill set and background and just my passion. And then had learned about multifamily through a friend, and just attended a few different events and realized this is something that I had been looking for a long time. Wasn't interested in single family. I own a house here in Houston and just didn't want to add to that exposure, but was very much interested in running a business. And when I learned about the syndications and capital raising and deal analysis and networking, it just checked all the right boxes, and particularly as I was looking for something that, was good for my transferable skills, was good for legacy building. And then the last one was something that had amazing tax benefits. I had, a fair amount of income that I wanted to tax shelter last year in 2019, and multifamily was just an incredible way to do that. And so decided to jump into the space, and was really looking for, I needed, from a tax perspective, to be a co-sponsor on deals, so that I could become a real estate professional. And so, and achieve the tax benefits that I wanted to achieve to reduce my taxable income, or to take that as close to zero as possible. And so I was looking for folks that had a fair amount of more experience than I had, and that had live deals that were getting ready to close. And so, moved pretty quickly. The space that I came from, was a very quick, fast moving, fast paced environment. And so I had to find some folks that I could trust, get invested in deals, and then also, work on the asset management side. I really wanted to get my hands dirty with the business to really learn it. That's just how I've gone about being successful in my career, is digging real deep and learning a ton and, figuring out, okay, well, here's what I know. Here's how I've been successful. How can I apply that to multifamily? And so just a few months into it, as we were managing some of the assets, both we have one in Dallas, 154 units, and 238 units in Athens, Georgia. It just was a great opportunity for me to get involved and to, apply some of the principles and views that I had. And then just that helped gain confidence in, my skill set and applying that to multifamily.
So, I get questions all the time, and the reason I think of this right now, just last night, I had a call with a gentleman who it seems so similar. A very successful career. He's been at this, in this corporate position for I think 13 to 15 years, but had really moved his way up. And finally, it's just like, okay, I'm just not passionate about this. Like I get this call often, it seems, but people want to know about how I transitioned. From okay, I've got this career path, whether it's military, law enforcement, federal agent. Then it's like, okay, well now I'm doing real estate. And they want to know about that transition and how I did that. And I'd love to hear your story a little bit. Let's dive in there a little bit. I know there's listeners who are also in the same boat, and they're either wanting to make the transition or they're thinking, well, what does that need to look like? What does that need to look like with my employer potentially? Or when do I know that I can make that transition? And so why don't we dive in there just a little bit and talk about your transition? Cause it said number one salesperson leading oil and gas sales. I mean, that's, you didn't do that by, sitting on your hands too long, right? You put a lot of time and effort into that. And so, but then to transition, that's a big decision. And I think a lot of people, it's a hard decision. So let's dive in there a little bit. And, how did you make the transition? When did you know that it's time, and maybe what sparked that?
Sure. My story is probably a little bit different than most folks. Fortunately, I was in a spot where, we had, saved a fair amount of money. I think, we just tried to save in the good years and, for periods that might have been a little bit drier. And so, it was kind of a pursuit of passion, if you will. And I've always been someone that likes challenges. And here was an opportunity to, I was searching for something for so many years. I would probably say a good 4 or 5 years. I was looking for, what other businesses could I start? And it was a few times, it was a New Year's goal to start something. And, just been very entrepreneurial in my life and, have run businesses. The businesses I ran on Wall Street were very entrepreneurial in nature. So I've had the business background and have had the desire and motivation and ability to lead teams. And so, for this, it really came down to, what's something that I'm passionate about. And I think for me, the tenant experience was something that I was, just felt a certain calling to, if you will, a certain passion for wanting to, exceed expectations at a property and exceed the level of customer service. And, for me, having worked on Wall Street and been in sales, your typical sales role, for me, it never felt like I was selling something. It always felt like it was a customer service function. And it was just trying to add value each and every day. And whether that was through, commentary, whether that was through indications without asking for something, it was just, I'm here to add value and be helpful. And, that's always been my approach. And, that transparency and upfront honesty and value add. And I just felt the business would, and has shown itself that it would just come naturally as an extension of being close to clients and clients that would have their guard down because they didn't feel like they were being sold something aggressively, but, looking to, someone was looking to add value. So for me, it was an opportunity where, I had wanted to try something different for a while and decided to put my career on pause. And it wasn't something that I felt comfortable doing, dipping my toe in a little bit. I did have to move a fair amount of personal capital last year. So I wanted all my eyes on the ball, full attention. And just given that I didn't want to, make errors in judgment in terms of, investing in people and investing in assets. So really wanted to devote myself to this all last year.
So when you left the day position, I mean, you said you could pause it, put it on pause. Is that, so that's something you could go back to if you had to?
It would be, I would just have to network and find, other, institutions that would be looking
Okay.
for that similar, skill set. But yeah, unfortunately in that business, if you step away, you step away, you don't go back to the same institution or so forth. So,
Yeah.
that was just a decision that I made. And, it was just been, it's the past, let's call it year or so has been an amazing journey where I've, woken up every morning with a lot of passion and excitement to, just improve and, get as quickly up the learning curve so that we can add as much value to others and we can find the best assets for, for our investors.
Hmm. So you mentioned you saved for a while. I'm not going to ask you to the penny, but was that,
Sure.
maybe you have a recommendation for the listeners, like, well, maybe you should have a year's worth, of expenses in the bank, or 6 months, or was there a number like that said, okay, you're talking to your wife, okay, honey, we've got we can live for this long before I've got to go back and find a job.
Sure.
How did you
Sure.
think through that?
Yeah, it's interesting. I had a professor that was a very senior person on Wall Street when I was at NYU, and he always said that Wall Street people are paranoid. They always are. They go in every day and they're never sure if that's going to be their last day, just because that's how things are. You're paid like outside of professional athletes and rock stars, and Wall Street compensation is really amazing, and so. I always felt like that lesson stuck with me. And so it was always, being conservative and investing and really trying to live on a low means basis so that, I would have the flexibility to do things and sleep well at night. I mean, we have no debt, our house is paid for and so forth. And it was that's kind of the decision that I made. I never wanted to feel that I was indebted to banks and other institutions. And so,
Wow.
to answer your question directly, I mean, frankly, we have, 4 years of living expenses, that we've just set aside. Just, that's for me, that's what felt comfortable. And,
Okay.
just having a fair amount of cash that, for a rainy day and so that, I could try different things and not be worried.
No, I think that's smart. If you only have a month or two set aside, you're already in trouble.
Sure.
So
Sure.
no, I appreciate you sharing that, because I've had that question. Well, like, when do I know it's right? When do I know I can step out and try to do this? And so then, tell me about I mean, you and your partner have done well, and maybe we have time to talk about that a little bit, but
Sure.
ultimately, what was the step for you learning this business and being able to make this happen? I mean, not just everybody can,
Sure. Sure.
not just everybody, it happens as quick as it has for you,
For
or with
sure.
as the success you've had. What were some of the key steps that you took, to having the success that you have in a short period of time?
For sure. So, I think also part of it is, it's 1 year in multifamily, but it's 18 years or so of business experience, of working business experience. And frankly, a large part of that on Wall Street. So, with that, there was already a lot of fertile soil. The foundation was there. So it just became, okay, I need to just understand how this market trades. What are the dynamics? What are the fundamentals of it? And so part of that was, okay, let me see how people underwrite, analyze deals. Let me really understand the Excel work behind it, and let me understand the pain points, moving cap rate here, and just quickly finding out, okay, this sell in this model will really change returns, massively. So, why is that sell important? And, just asking tons of questions. And, I decided that I was going to be purposely passive, to start with, and invest with people that were willing to invest with me in terms of investor time, and answer a lot of questions that I had. And just, from that, I could judge the level of transparency. And, if that was the dating phase, how it would look like when, we're married and I'm invested in their deal. So that was something that, I decided to do is really dig in hard to the Excel modeling, ask tons and tons and tons of questions. And that's just been my background, intellectually curious. So, enjoy the learning process and read as much as I could, watch as many YouTube videos as possible. And so it's just a fully immersive experience. A lot of that was why I needed to just dedicate the last year to doing it, because I felt like to do it justice and to deploy that amount of capital, I needed to, have full attention to it.
How much weight would you put on the passive investing that you did as far as to learning the business? Do you think, would you, because I get that question as well, well, should I invest passively first? Is that going to help me, learn the business? Is that going to benefit me, when my ultimate goal is to become an operator, and
Sure.
what would you say?
Yeah, I would say it definitely helped, right? I mean, I would rather, stub my toe in a passive deal than in a deal that I'm sponsoring. And, because that starts your track record, right? When you're sponsoring deals. So for me, the passive, it was quicker diversification. You can write smaller checks in passive deals. I've invested in Arizona, Florida, Ohio, Texas, and different locations just in small amounts to spread that risk. And so for me, diversification was just really important. And then it was also a way to get to know people and get to know sponsors, get to know submarkets, and get to know how they think about assets, kind of what their reporting is like. And then also from that, that was a learning experience in terms of how would I do it? What can we cherry pick from their ideas and apply to what we're doing? So I would say, yes, passive investing, if you have the capital to do it first, that's a smart way. And frankly, if you have time to kind of leg into the market, if you will, that's smart, right? I didn't have the luxury of time. I had a window that by December 31st, 2019, I had, that was kind of the wall, if you will, where I had to deploy a fair amount of capital and get the tax benefits that I needed to get to tax shelter my income. So if you do have the luxury of time, yes, passive investments. Now it's for sure for people that are investing passively, or, just make sure you can trust your partners. That's so critical.
How did you, what's that relationship been like, as far as working with those operators, really with the intention of you learning the business? I know there's some operators that will cater to that a lot more than others,
Sure.
I've learned. And I just wonder, what that experience has been like for you.
For sure. Part of it was, I sat down with these folks a few times and also kind of did some reference checks, if you will, just talk with other people and, to learn about the deals they've done, to learn about them and their character and so forth. And, all of that checked out. So to me, that was super, super important. And they were also, kind of just the goal setting, like, here's what I'm trying to do. Here's what I want to learn. I want to get my hands dirty. Just very open and honest. I think I can add a lot of value. And so they were very open to that. And, they've seen, they've been, it's been helpful, right? In terms of being on asset management calls and writing reports, doing some analysis, all of that. And, I think that helped them, but it also, was very beneficial in terms of providing confidence for us looking at our own deals. My partner who's in California is Jeff Yang, and it's a fantastic partner. And so just really excited as we've underwritten probably 200 plus deals in the past, 9 months or so.
Give me just a couple things that were just key in getting to the first couple deals.
Oh, in terms of the first deals I passively invested in, or
no, as on the active side, on the active side, if you had to pick out just, let's say, two things that, like, you would say, okay, talking to somebody else, here's two top things that helped me to get to the first few deals on the active side.
Yeah, I think, on the active side, in terms of, what we decided to do, we took a long-term approach to it. And so we decided to build our team. And when I say team, meaning service providers and property managers in different submarkets, folks we're going to use on the legal side, folks we're going to use on the financing side, insurance, property tax consultants. We wanted to do all that groundwork first, so that when we went out to brokers and we scheduled a tour to Dallas and sat down with, the top brokers in the region, and, the first question they would ask is, like, why should we show you a deal? Like, why would we award you a deal? And they were like, who would you use for property management? And we were like, well, if in this market, we use this property manager, and that, submarket down the road, we would use this. And so they saw the level of work that we did. And so then we were at a spot, we wanted to make sure that we could, if they gave us a deal, we could underwrite it and provide feedback within 24 hours. And so when we were ready to do that, then we were ready to sit down and talk with them. So I think that's one thing, is that, before you reach out to brokers, just make sure you have your team. And, so you only have one time to make a first impression, right? So make sure that what you're going to do, what you're going to say. If someone gives you a deal, that you can come back with concrete feedback. And that's just a principle that I've followed throughout my career, is that, a lot of people, unfortunately, just don't follow up. And for me, it's about the follow-up. I feel like that's where, my career has been differentiated from a number of folks, and particularly in sales. It's all about the follow-up. And, you told me that you were looking at this last time we talked. And so I wanted to see what your thoughts are on this or that. And the same thing here is that, brokers are on the side that I were on when I was, on the sell side at banks is they're trying to sell transactions and deals. And so, they want to see that you're following up if they show you something. And so for me, I understood what that was like, and I understood how it could be frustrating when people didn't follow up and you sent them an idea or spent time to answer their questions. So, that's something that we're very keen on. I mean, 24-hour feedback to brokers, pretty detailed, not a slow maybe, but a pretty quick, hey, we're going to spend more time, or no, this just doesn't fit for X, Y, and Z reason. So kind of
love that.
That would be the advice that I would give.
This business is so much about following up.
Yeah,
it doesn't matter if it's
amazing
the broker
how many people
or if it's
don't.
an investor.
Yeah.
So Ryan, great advice, no doubt about it. I couldn't agree more. It doesn't matter if you're going to a conference or you're talking to an investor or talking to a broker, you better be following up. But just a few final questions before we run out of time. But what's been the hardest part of this syndication process or business for you?
I would say the last 9 months, right, has been a time where, pricing has just, felt pretty rich. And I think what's been really hard is that you've had to stretch your underwriting to get to whisper asking prices. And there's been times where we've actually bid over asking price. There was a deal where we bid, 500,000 over asking, and someone bid, like 1.1 million over asking. And that was probably like, 10% plus over the asking price. So, that's a sizable premium. And so that was really hard to see, some of these transactions go, and there's no room for hiccup in the model, right? If you're forecasting 3+ or 2+% rent growth and the market declines, like, that impacts your hold period significantly. So, for us, we wanted to really do as much de-risking as possible. And that's hard to do and win deals in this market. And, I think that's going to change though. And I think we're in a spot where the next few quarters, as we have this whole COVID-19 crisis and unfortunate layoffs and the like, I think that's going to provide opportunities for people that, for valuations to come back down to earth. So we're excited about that.
You're probably thankful now you didn't pay 10% over.
Exactly.
Right?
I mean, we look at a lot of deals that, we had a lot of heartburn over, and we're thankful that those deals didn't get awarded to us. So,
tell me a couple of ways that you were prepared for this downturn. Let's say go back before you knew it was going to happen. How were you preparing for this?
Yeah, I mean, I've been through a lot of market cycles. In commodities, there has been a lot more market cycles than there has been in terms of equity markets. There's just a lot of movement in the commodity market. So, feeling that agony and feeling when, things just don't fit right in terms of, pricing. And so we were just, being conservative. We would just say, here's a number and this is what we're comfortable with. And we think that this is where it should trade. And this is what we think, this is what the property manager is comfortable with. This is what we're comfortable with. And, here's what something traded down the street. And so we would just say like, here's all the basis for how we came to the valuation. And so, those are just facts. And so with that, if people wanted to overpay, that was what it was. But we felt, because if there were a COVID-19 situation, we didn't want to have overly aggressive underwriting. And so I think that's one way we prepared, by just making sure, which is a huge part of it, is just making sure that you win the deals that you want to win because you've priced them appropriately. So I think the underwriting and the analysis up front is key to being able to operate during a financial crisis. Secondly, just making sure you have adequate, for our modeling, we always put in buffers around CapEx and different numbers so that we have adequate, cushion. We hold things in the back pocket in terms of, hey, we could do this at the property to boost rents if things, if we need a plan B to boost, income or so forth. So you have to have some area for cushion. Otherwise it's going to be tough. And so then that translates into reality when you're operating the asset, right, is that you have some cushion. So, that's just critical. And so, you're looking at, some cash reserves and, that could cover in some cases, 20 or so months of debt service. So that's a great position to be in. So we're fortunate to have those opportunities.
What's a way you've recently improved your business that we could apply to ours?
Honestly, from the time that I started in this space, I've probably, I guess, built, redone, tweaked, probably 50 to 60 iterations of my model, my valuation model. And so with that is just, I want to see data cut and analyzed a certain way. And so there's this kind of relentless pursuit of perfection in terms of improvement and figuring out, hey, what could I add to this or improve it so it takes me less time to get to a more accurate answer. So that's one thing. I would just say there's always room for improvement. And, I'm seeing that. And a lot of it is, having a partner, a really strong partner that you look up to bounce ideas off of. So that's just one very, very critical thing. It's hard to do this alone. This is definitely a team sport, but I would even say it's more of a partnership sport. And, having that person there to run ideas by has just been critical to, vast improvement quickly.
What's been the number one thing that's contributed to your success?
I think it's it's a combination of my background, the follow up, and then, the partners and people that I've associated myself with that have just been, supportive and really strong. And, so I would say, it's those things in total. I don't know if there's one particular thing, but, I feel that my background working on Wall Street and putting in lots of hours and working in very volatile conditions where, markets move 10% in a day or in a few minutes, kind of prepared me for the real estate markets.
And where are you finding investors right now?
People that have known, liked, and trusted me for time, folks that, I've rubbed shoulders with in my career in oil and gas. And those are folks that, actually this is kind of real estate and multifamily in particular, which is 100% my focus is, high occupancy, asset that just has really good fundamental trends with it. Right. I mean, we're becoming a nation of renters. That whole story, I think, has resonated well with my investor base, as well as, the deep level of analytics that we do on assets and the level of transparency. So, folks that have known me and, know that it's a very transparent investment opportunity, and they can ask any questions and there's no dumb questions. And, we've thought critically through, the pros and cons of the transaction. We've kind of mapped those out.
Any new ways that you're finding people outside of maybe your old contacts?
Yeah, I mean, I think just, going to different, real estate meetups and, Whitney, with your inspiration, I started a podcast. So that's gotten some following and, so that just creates more conversations and networking opportunities and, people that have reached out and said, hey, I'd love to chat with you and hear more about your background and what you're all up to. And would love to, hear about any deals and so forth that you all have. So that's been one way for sure. You have to kind of, get out of the shell, get out of your comfort zone and proactively, visit with folks.
And how do you like to give back?
We give back in a few ways. So, I grew up playing in a band in high school. It was probably one of the more life-changing experiences that I've had. Had two good friends in high school, and we wrote all our music because we couldn't play cover songs. We just weren't good enough. So, with that, I wanted my kids to have just that experience. And so, part of what I had mentioned earlier in the podcast was, looking at music franchises. And frankly, I just didn't want to charge people the rates that that the franchisor was asking. And I decided to just go to my kids' school. They go to a school here in Houston, and decided that I was just going to sit down with the principal and the head of the PTO and say, I would love to give back. And here's a unique way I can give back. And that's, I could, coach a rock band at the school. And so they said, all I need is a room. And, if the PTO could, buy some speakers and so forth, that would be great. I'll find the other equipment. And so they said, yeah, that works. Here's a great room in the central campus. And so we started that. just over a year ago, and it's been great. The kids have had an awesome opportunity to grow their friendships, and to play in front of their classmates, and I've coached basketball, and then I honestly try to do this for people that know me. If anyone has a need, I just try to say I'm never going to deny someone. I always try to help out in any way possible, whether that's of my time or of my treasure.
Well, that's a very unique way of giving back, and I've never heard that from anybody else on the show. Anyway, just going to the school and helping start something like that. That's incredible. Ryan, I appreciate you just sharing your transition, from oil and gas to, from one, career, and just shifting completely. It's not an easy thing to do, that's for sure. And like I said, I get questions almost weekly, from people trying to do the same thing and wondering how I've done that. But so thank you again for sharing your story and just how you've been successful at it. But tell the listeners how they can get in touch with you, and also tell them about your podcast.
Yeah, for sure. So, you can reach me on email. It's ryan@lifechangingcapital.com, or you can go to my website, lifechangingcapital.com. The podcast is on YouTube. It should be on Apple soon. Whitney was one of our guests, so it's a great podcast there. We've had a number of episodes, but it's something that's a little bit more thematic, and that is on YouTube. It's called Multifamily Rockstars.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.